What about valuing accounts receivable? Now, this concept of net realizable value, wherever you see net realizable value in the exam, this is what you are going to, it's the value that you're going to realize that you really get net of any costs, backtracking it, right? It's the value. So yes, you have receivables of $1,000. However, you don't really think you're going to get $1,000 because a customer is usually, maybe they only pay you 95% of what they owe you, right? That just, you know it from the past. It just happens like that. So $1,000, 95%. That means here, actually, I'll just write it out for you. $1,000. If you know you're not going to get $50, that's 5%. So your net realizable value of your receivables is now $950. And this is how it's displayed on the balance sheet, right? You've got your accounts receivable minus allowance for doubtful accounts, and it gives you your net receivables. That gives you your net receivables, and that's how it's displayed, just like PP&E, right? With PP&E, we've got the total cost of all our PP&E minus accumulated depreciation equals our net PP&E. And for all of our intents and purposes, the allowance for doubtful accounts is the same thing as our accumulated depreciation. This is super important. I'm going to draw this out for you. And this is pretty generally speaking, but it holds true. So when we've got, every year to increase depreciation expense, we debit depreciation expense. We credit accumulated depreciation. That's the process. And then expenses, that's just for the period in time for the year. We are going to add that to the cumulative balance of accumulated depreciation. So if accumulated depreciation, is $1,000, this year maybe we recognize 50 of depreciation expense and accumulated depreciation of 50, right? We're going to increase that because this is a contra account, just like allowance for doubtful accounts. This is a contra asset. So to increase it, you credit it. To debit an expense, you increase it. So now accumulated depreciation is 50. All right. And let's say building is 2,000. You net those together. That's what you do. Same thing here. Same exact thing here. Now we have different methods, but generally speaking, we've got bad debt expense. Accumulated depreciation is allowance for doubtful accounts. It's the same treatment. It's just for AR instead of PP&E. I want you to remember these and think of these the same way. It'll definitely help you. All right. So at the net realizable value, that's what that is, right? It's your receivables minus the allowance for doubtful accounts, which is an estimating account. You're kind of like estimating how much you don't expect to receive, right? It's a cumulative balance of that, how much you really don't think you're going to get from your customers, the net amount expected to be collected. And we'll see that on our balance sheet.